Today we'll talk about how exactly do you buy and sell shares using Zerodha. Zerodha is a leading discount stockbroker and offers trading services across equity, currency and commodity options. Zerodha customers can buy stocks, mutual funds, IPO and trade in derivatives across BSE, NSE and MCX. And there are multiple trading apps provided by Zerodha for order placement across devices. Here we'll just consider Zerodha Kite mobile application for your order placement. Step number 1. Analyze or monitor the stock you wish to purchase. Now you have to log in using Zerodha login credentials to Kite Mobile App and open up your watch list. Select the stock you wish to buy from your watch list. Once you click on a particular stock, its entire details such as market depth, bid, number of orders, offers and quantity along with the buy and sell option will appear. To know more about the particular stock, you can scroll down and click on fundamentals, or in fact you can do on technicals as well. Before you place the buy order, you can view and analyze the charts of that particular stock by clicking on the charts icon. Secondly, you have to fill in the buy order details. Once you are sure that you want to purchase a particular stock, click on buy. Fill in the quantity you wish to buy for that stock and select the MIS box. In this case we are talking about MIS, which is margin intraday square of or market intraday square of order. Then you have to just place the buy button there. Thirdly, select the order type. Now there are multiple order types that you can use using Zerodha trading applications. In this case you will see market order, limit order, stop loss limit order and then stop loss market order. In case you want to place a market order, select the market as per your order type. Here you will not be able to alter the order price because it will be executed on the current market rate. If you select limit as the order type, you can set an order type as per your desire. This buy order will be executed if the limit price that you have set is reached before the auto square of time, which is end of the day. If you select SL, which is a limit order with added stop loss, you need to set your stop loss price, which when reaches executes the order as well as limits your losses. Such orders are executed once the stock reaches the stop loss price. For SLM, you will have to set a trigger price for your order. Once the trigger price is hit, your order will be squared off. This order will be squared off the current market rate as and when the stop loss price is met. In addition to this, you can place bracket order, cover order and after market order. We'll go ahead and use these order types one by one. First of all, bracket order. Select BO or bracket order if you wish to trade in a range. Here you need to set a target price which when met squares off your position. At the same time you need to enter a stop loss price which will limit your probable losses. This whole setup works as a bracket for your order that ensures profit or locks losses as per market movements. Let's take an example. Let's say assume that you have set the stop loss amount at rupees 10 and the current market price of your buy order falls. If the market price falls by rupees 10, your stop loss order will be executed, thereby limiting your total loss to rupees 10. Now assume that you set the target amount as rupees 20. This means that if the current price of your purchased stock rises by 20 rupees, your order will be squared off, converted into sell order in this case. You may also add a trailing stop loss in Zerodha orders. For this, a trading amount must be set which increases the stop loss amount if your stock's current price rises by the same interval. Likewise, the stop loss amount decreases and this can go on. Secondly, we have cover order. To buy shares in Zerodha Kite in cover order, it is mandatory to put a stop loss trigger as such orders offer comparatively higher margin. The difference in the current price of your selected stock and the stop loss price should not be more than 1.5%. Thirdly, you have after market order or AMO. This is a special order type for those investors who are not able to trade during the market timings. If you're busy or something, you can place AMOs in Zerodha between 3:45 p.m. to 9 a.m. when the market is closed. Simply select the stock you wish to purchase, fill the desired quantity, price, select the AMO type as an order and go ahead. Finally, validity of the order. This segment contains two alternatives. One is day, one is IOC. If you select the day validity, your order will remain valid for that entire trading session. IOC stands for immediate or cancelled. Select IOC validity if your order quantity is huge. For example, if you placed 100 orders and eventually gets a seller for only 60 of them, since IOC is applied, those 60 orders will be executed while the remaining 40 will be cancelled. So this is pretty much it as far as the specific features of buying and selling shares within Zerodha applications are concerned. You can do the same procedure across Zerodha Pi, across Zerodha Kite Web. More or less, the features look and feel will be similar. But then these are the specific provisions you will get. Hopefully, this walkthrough was helpful for you, and so was this podcast. We'll see you in the next one soon. Thank you so much for listening to this one. Bye-bye.